Alrighty, so welcome to another session with me today. Today we are continuing our healthy trading habits segment. So we started 2 weeks ago, and first we went over patience, and then we went over discipline last week. And those really do go hand in hand, but your patience is built within your discipline, right? And the reason I chose trading routine is because I've noticed a lot of the people that that are in the chats, people that we work with, um, prospective traders, people who aspire to be traders. A lot of it is you're learning, you're watching the videos, you're showing up to sessions, you're looking at the charts, you're taking trades, you're doing all the stuff that you would say makes up a trader, what a trader is. And what I what I notice, um, a big difference between the profitable, consistent, professional trader and the person who's trying to get there, the aspiring trader. A big part of it comes down to that trading routine, trading plan, all those things that I kind of preach over and over. And it seems like sometimes you just think it's not really important. It's just like, man, I got my money in my account. I'm just gonna take this trade. I see the setup. Um, and what happens is it doesn't work out over time. You may take some good trades, but it's that whole I give it back. I'm struggling. I'm plateauing. I mean, I know many of us can empathize. We can relate to where we just not where we want to be at in our trading, and we see the potential for it, and we really start to learn what the business is over time. But it's like you struggling to really get over that hump and get through to the other side of where you're consistent. And a big part of that to me has been just treating trading like a business, right? We always say treating it like a business and not just like a hobby. Like, oh, I got some free time. I'm just gonna jump on the charts, see if I see a trade. It's Asian session. I don't really see Asian session, but I see something. I'm gonna take it. Um, oh, I couldn't sleep last night. I'm up. It's 1 a.m. I haven't been sleep. Well, London's going on. Let's take a trade. Just these sporadic things. Like no different than, oh, I got a few hours to kill before my class. I'm gonna play some NBA 2K, right? I'm gonna watch some TV. See, trading is not one of those passive activities where you can just pawn it off when you can fit it into your life, right? You have to fit your life around trading. I always like to make it fit nice, right? You can't fit trading around your life. You have to fit your life around trading, right? And it sounds counterintuitive because we got in this trading business to basically be free, to not have to work, right? To not have to be wage slaves. And there's the philosophy that you stay on the charts all day, you you don't move. The more you're on them, the better, right? And then there's the philosophy that less is more, and that's more so the Forexian philosophy. We don't want to spend all day on the charts. We don't want to watch every session. We don't want to burn ourselves out. And it's part of it is just understanding what it is to be a human, right? How we operate. And if you're gonna get burned out if you don't do other things in your life. If you don't have a balanced life, it's gonna lead to imbalances, especially in your trading and especially in your profit and loss. So this is why I have a crucial role to the Forexia family. And these Mondays are crucial to our trading development because we're gonna be looking at strategy. We'll do the currency tracker. We'll excuse me, we did NFP last week. We do all the news events, the strategies. We have the Winlife signature now. We have the Dylan signature, Human's DMA, Brandon's ECR, Mark's trap trading. We have ways to trade, but what basically comes before any of those is just being balanced, being able to execute, right? So it's almost like you can think of the athlete, he can learn different techniques, different basketball player, right? Different jump shot methods, interior game, different defense, all of that. And no matter how good he is, let's say he nonstop practices and he never tends to his body, he never rests, he never, does yoga to stretch out, never spends time with family. What happens is they're gonna burn out, they're gonna end up in pain, and they're not gonna last. And those are the people you will hear about, like the people who just, you know, burn out. Like think of like tires, like you're just burning them down to the core. Now you're on your rims and you're just burning the metal. Like you need to switch your tires. You need to give it a rest. And these are those people that end up on drugs a lot of times, and painkillers. Like instead of tending to your body, you go take painkillers instead of really listening to the elements just to push yourself. And we actually see this phenomenon a lot in the professional wrestling industry. So many of the wrestlers die from like overdose on pain pills and heart attack because wrestling's such a taxing sport on the body, right? Even if it's fake, these guys are destroying their body. So what happens is, if you're not giving yourself time to heal, you're not giving yourself time to break. And these guys have crazy schedules, like 400 events a year. So they just burn out. And that's why we have so many wrestlers that die in their 40s, die in their 50s, or, by the time they can retire, they can't even walk, right? And I know we're talking about your physical body, but everything translates. So what I'm getting at, guys, is we really need to protect our mental, and we really need to protect our trading process and how we approach our craft. So how do we do this? We use a trading plan, right? And we create a trading routine. And I'll preface things by saying at times a routine can become mundane, and it can almost hold you back because you go on autopilot too much, right? And we've actually done a lesson in the beginning of July where we talked about mixing things up and getting out of your routine. And that's definitely important. So I don't want to take away from that perspective, but let's think logically. In order to get out of your routine and try new things, you have to first have a routine. Okay. So we're going to go down a few tips. Anybody want to chime in, want to share their experience? That's actually what I love. Shout out to Jonah. Last week he stepped up and he spoke to the whole class. And that's what leaders do. We speak up, we share our weaknesses, we build together. So if at any point someone wants to chime in, has something to share, it's more than welcome. It's actually it's we like it, okay? It's encouraged. Alrighty, so the first reasons why we do want to stick to have some type of trading routine is because it's going to allow us to instill good habits, right? The secret to building good habits is going to be that repetition. Like Weezy said, repetition is the father of learning. Well, that's where I heard it. So we want to design a personal routine that works for us, that facilitates developing good habits by encouraging us to repeat the same task over and over, right? Your trading setup, your trading entry method, just like brushing our teeth every morning, adhering to routines, it allows us to foster and match our goals and our aspirations. And if you think about it, it saves you time, right? You don't need to think about brushing your teeth anymore. But when you were a kid, what did your mommy do? She said, hold it here, squeeze the toothpaste. She had to do it for you. When your first time you did it, you didn't made a mess. You got toothpaste everywhere. You missed the brush. Then she had to show you, oh, go like this, go straight, go in circles. Make sure you get the back teeth. Make sure you get the corner, right? God, someone always got to draw on the damn screen. Fuck up my flow. Alrighty, so let me disable attendee annotations. Alrighty. So as I was saying, so you had to kind of learn how to brush your teeth, right? But now let me ask, is there anyone that still has to think about brushing their teeth? They say, okay, what do I do? Grab the toothpaste? Or do you just grab the toothpaste, squeeze it on, start brushing your teeth? Don't even think about it. Hello? Y'all can respond. Hello, hello. Anyone there? Let me know y'all alive in the chat. Thank you. Thank you. Let's get going. It's automatic, right? So thank you, Zoom user. I guess kind of a routine. I hope it's a routine. Like every morning, it should be a routine. Brush your teeth, wash your ass, put on your deodorant. These are very simple things, right? We have to do this every day. But the point is, in your trading, this is what will happen. It will become routine where you don't have to think about it. You don't have to sweat entering the trade. You don't have to sweat when you're gonna exit, when you're gonna move your stop loss. It becomes a routine. But first, you do need to actually have your trading plan. And that's why we're always talking about this plan so you can stick to it, right? So let me go to the section I have. So first, you want to create your routine. And I think a big part, hang on, I forgot to mute people. Mute all. I think a big part of the routine is going to start with your sleep cycle, right? And just getting rest. So when do you get your sleep, right? That's how your trading should kind of be centered around. So me, I will sleep through London because that I'm on the West Coast California time. So my routine, and like I say, I've traded London many a times when I wake up in the middle of the night. And sometimes it works out. Sometimes it's like, man, I should have waited. I'm a little sleepy. So this is why in my routine, I like to wait to New York or a little bit before New York opens, right? So that's my session routine. And that allows me to develop more intuition on when the specific moves are happening. It allows me to look for what I'm looking for. If I'm in New York, I can react to the Asian accumulation, the London breakout, and I can lock in on that. The same way that Brandon locks in on that Asian accumulation and takes that London breakout as his move, he's locked in on that. So you need to have your routine, pick your session that you lock in on, especially if you're not profitable yet. I would recommend picking one session, mastering that session, mastering that time, mastering your mind during that time. From there, you can trade more sessions, but I would say do what you can to focus, to lock in, right? You also want to have your trade filtering routine, your watching routine, how you watch pairs, how you hawk them. And you see with me, we've been doing the currency strength tracking, where we'll kick the week off and we'll see what's strong, what's weak. We'll kind of make you know, a little barometer for what's going on with the currencies. And you can have a similar process. I actually learned this type of process from Mark English, who would do spreadsheets, and he would actually map out each pair in the spreadsheet and where they were trapping. And he wouldn't take a trade until it was done. And when I saw him do this, what I said was, man, that's super tedious. Like, why do I want to do this? And why can't I just take a trade? And then when I saw his win rate and how successful he was being and how he knew what was going on, it clicked. It made sense. This is why we do it, to increase our win rate, to make great trades. So we need to have our own trade filtration process, whatever it may be. Whether you, like Brandon, he doesn't do trap correlation and look at indexes and daily time frames per se. He goes through and just scans each pair, sees the structure that he's looking for, and that's his process, right? So the point being, you need your process. You need to find what works for you. So you can try these different activities with the mentors. You can kind of test stuff out, and when you're doing so, leave that lot size small, and then just find what works for you. So get that going. Have your setup routine to where you know exactly what trade you're taking. I always recommend early on, just find one setup you want to take and stick to it. Don't try to take a reversal, wedge breakout, and an ECR and a trend line breakout. Just pick one particular move you want to focus on, or at least make sure you're sticking to maybe like one entry method, or one particular setup, and maybe you want to use a couple variations of an entry method. But what I would say is the more narrow your focus is, the higher chance of success you'll have early on. The it will allow you to actually start to, you know, form your routine. It will allow you to see the different, the, you know, the differences, the subtle differences in why something worked. But if you're all over the place, taking different setups, different trades, oh, I sold it, I bought it, I don't know what's going on, you're gonna just be confused. So it's better to just lock in, attempt to see it through the lens you have currently going on. And if it doesn't work out, it doesn't work out. All right. So big part of this is, guys, is just creating structure in our life. Khalees said, tried that before and got impatient. That caused me to see why I need to have the patience to stick to one setup. Yeah, yep, exactly, exactly. And that's actually what I did. I stuck to the one ECR for like 2 to 3 months about a year and a half ago. And that's where my real growth happened, when I stuck to that one setup. And you'll feel like you're missing trades. You're like, man, I saw that. I could have took that. I could have took that. I could have took that. And don't, when you see that happening, don't look at it like, damn, I'm missing out. Look at it like, damn, I'm starting to develop the vision for this. And the vision doesn't really happen until you're able to readily sit on your hands and observe. And that's why we say observe more than you trade, back test more than you trade. So when you're entering with your money, it's go time. Right now, you might be on a micro lot. You might be trading $10, $50, $1. But remember, our goal is to, you want to be dropping 10K on a trade, 40K, $1 million. Think big, right? So in thinking like that, you need to develop your trading techniques to where you're not just taking any old trade and you're saying, well, I only dropped a small lot. No, that's not the way to think. The way to think is, I wait for good setups. I manage my risk. Okay. And that's what's going to make the transition to grow your lot size, to compound your account, seamless, because you're treating it serious. And when you actually graduate to when you can drop a standard, if you're not there yet, you're going to have earned that. And you're going to feel those emotions where maybe you want to close early, but you say, you know what? This is my plan. My risk is within my risk tolerance in my range, and it's 5% or less of my account. So let's go for it. Okay. So you gotta have a solid foundation. Like the saying goes, you stand for nothing, you fall for anything. So just know where you going, know where you want to be in your mind, and tell yourself, what steps do I have to take to get there? Because yeah, we in the business of making money, but more importantly, we in the business of growing accounts. We're account managers and we grow them. And a great account manager, in my book, can provide great reward, high reward, low risk. Okay. So it's all about risk to reward ratio. Alrighty. So let's see. Do we have any other questions? Anything anyone want to ask or chime in? Just remember, guys, setting that trading routine, that plan, gonna save you time. Stuff you had to think about, you don't need to think about. Going on autopilot is not a bad thing, because you set the parameters for that autopilot. You know, you're controlling it, and that's the beauty of programming your subconscious. You actually program it to work for you. So that's what we're doing. We're training ourself. We're training our subconscious self to be able to do the things where we won't have to think about it, right? Our muscle memory will literally do it. All righty. So also, this will help you, this will help you reduce your procrastination, because you'll know exactly what you need to do. Zoom user said, you think it's okay to trade 2 sessions with 2 strategies as long as I back test it properly and stick to it? Yep. That's just fine, as long as you back test it and stick to it. And if you can handle it, right? Because I'm not staying on for London and New York. That's too many hours for me at this point. I want to be on the charts for maybe 4 hours tops each day. So I like to pick the times where I know the move's going to happen usually. And that's just me. I've been on the charts where I stayed on the charts 24 hours. I've traded every session uh, religiously for at least, you know, a month here, a couple months there. So I definitely have the experience there. And what I've learned is it's just trading becomes so much more smooth when you lock in. Do I swing trade also? Yep, I do swing trade. And I consider myself a hybrid trader because I do what we call twin positions. And I enter with two positions. In my first position, I secure my 1-to-1 risk reward ratio or something close to that, or, you know, I have a take profit that's not too big, and then I'll move to break even and let my runner run. So it's like a hybrid scalp swing. I can scalp in and make moves off anything, and then I can leave my risk out, half my risk out there to really catch these bigger moves. And actually, that's the technique I adopted because it allows me to not stress when I'm holding. After I take my initial risk off the board, like I'm good to hold for days and days. But honestly, before my initial risk off the board, I'd be babysitting. I can't front. I'd be babysitting. So that's what I'm working on too. Krim said, been on the chart today since London. Soon enough, we'll cut that down. Yeah, and like around now, you should not be trading. By the time ready for the week starts, if you're still looking into a trade, you want to get out. Not get out, but you want to stop trying to find an entry. You know, we're going to start accumulating around this time. Okay, Sabir said, tell us something about the signature trade. All right, yeah, so the signature trade, and I saw someone just grab the book. Thank you, thank you. Signature trade is going to be right here on elwincoleman.com. You can grab it. If you want to do a one-on-one session with the book, you can grab this, and then you basically get the one-on-one session at a discount. You can use the code Forexia with exclamation point, save even more. But yeah, basically my signature setup is just is fairly simple. It breaks down the multifractal nature of the market. It shows you how to use all the time frames within the market. But as far as like the setup, it's always going to be going with the overall direction of the market, right? And that's going to be on you to determine. And from there, it waits for some type of induction against the overall direction, right? So like a breakout, get sellers on board, trap sellers. So like, you know, I could buy right here, take it to up here, something like that. So the setup's always looking for overall direction. You can always use your higher time frame. Let's see. So something like, you know, you see that downtrend, but then you see this downward momentum, but then you get an induction against it to get buyers on board, right? What do you see? Same thing, right? We see our M. What I do is I wait for the shift out of that M, catch my retest on a lower time frame down to the 1 minute for sniper entries. And what's most important is we want to identify which direction the market is going. So when I see something like this, it's not the best example. It's a little choppy, but there are many ways to get in. You see something like, so even like this, right? It's a micro, but drop in, then we get accumulation, break, and you see that happens at what? New York. And then could look for entry into the move here. But the beauty of it, we do like the 4-hour work we do the higher time frame work in the signature, but what we do is we really break down the multifractal nature of it, and we take it to lower time frames, right? So for instance, if you did want to catch this sell, which I still speculate is a counter trend induction. I still think we're going up. So we might, I'm thinking something like this. But remember, the market is a multifractal. So we would want to catch moves either way if it makes sense for what we're doing. So, um, you know, what we're going to do with the Winlife signature, what we do is we always want to spot two type of traps. And who can tell me the two type of retailer traps that we look for in the Winlife signature? Okay. Oh, thanks for buying the book, brother. Yeah, definitely get a one-on-one with me. We can go over things. Thank you for that. Let's see. Do I trade induction trends? I usually try to stay away from those, but sometimes, you know, I'm not 100% sure it's even induction. So if the trap is clean, I will trade an induction trend, but generally I stay away from them unless it's so obvious that retailers are trapped the other way. Okay. Do I also use EMAs? Yes, I do, but I don't use them until I enter. I use them as an entry confirmation. I actually take ECR entries, but it's not until the exact moment. Trendline trap, yep. Trendline trap plus zone, yep, you got it. Support resistance, exactly. Trendline and support resistance, boom. Do you think there was a trap on CAT CHF? I don't even look at that pair. I don't look at CHF pairs anymore, but I will try to remember to look at it after this. So in the Winlife signature, we'll look for stuff like this, you know. I'll show you how you could have took the reversal um, on Thursday, and it, you know, you could have even like kept it in NFP, and you could have still been in the trade now. And let's see. So, and you know, like all the mentors, like our setups will kind of align. Like you can see the wedge, right? You can see the wedge breakout. You can see the M, right? So when this happens in the Winlife signature, technically, what you want to do is wait for the shift, right? There's two places you can get in because you can get in here if you speculate this was a peak M and then price came right back here. Who can tell me why price would have come back here where I've circled? Why would price do that? Trap buyers, induce buys off trend line. Perfect. Perfect, guys. We are really getting this stuff. Okay. So that can give you your speculation, your confirmation to sell, right? Your session timing, London Open, New York Open, boom. See our EMAs crossing here. See how that cross happened right there? Shift down. Down. And then even like another little entry here if you wanted to get in at around when London was closing, right? And then today, looks like they're still going down or at least trapping, but accumulation, break high during New York. So if you wanted to get in this move, would have been a little tricky. We didn't get our cross to here. So you could have got in around here, maybe this candle, still being in. So it works on many levels as the market is a multifractal, like we say. But I would say some of the key things in the signature, and you'll see it in the book, is what I like to do is just basically wait to identify the overall direction and go with it. And the reason is, guys, is because those moves will pay out a lot more than trying to take a counter trend move. No. All right, let me give you an example. I think this will be a good example. So right here, okay, so this whole thing, let's see, okay, this whole thing, we're bullish, right? Look, we're going up. Now we get to this type of area, choppy area range. So once we get in here, a lot of us get confused. A lot of us don't know what to do. I've been there, right? I still get confused sometimes. So you could take this reversal. It has the same things we talked about in the last example, right? So you get your M, you got your wedge, you got your high broken, pull back, shift. You got buyer induction off a trend line, giving us a perfect entry into the move. And a sine wave is a sine wave. A multifractal is a multifractal. But we're not going with the overall direction. But like I said, just because price accumulates, break to the high, drop low, don't mean you just expect it to drop to the floor. No, this is how the market moves. It's like a little gear. Accumulate, it uses this motion. And that's why you'll see daily structure happen every day. We don't just see, sometimes we do, but not generally, not every day. So for me, when this was happening this whole time, I was not selling Euro USD. I was not trying to catch a reversal. And believe me, so many people were. And it can pay out, right? It can pay out. That's 130 pips. These moves can pay out. But what do you see? We're actually going up. So what you could do, hang on. You know, you just wait for this range to be handled, to be dealt with. So we want to see what happens, right? And I'm not saying you just trade because a range gets broken out of. No, we're doing everything in hand with it. So if you really wanted to play it safe, wait for an aggressive candle. So this kind of, you know, playing around, but boom, this candle, this 4 hour, that tells me we're going up. I still have the bias of going up, and I'm looking at other things like the indexes, etc. And it tells me they're not coming back here to let these traders out. So once that shift happens, what I can do, go on a lower time frame, look for ECR. And you see this 4 hour candle right before London open. This is actually what's going to give you that 15-minute ECR. I don't even need to zoom in. I just know look at these. Accumulation for 12 hours, small pullback, London open, boom. Accumulate into the next day. Pullback during London, New York open, move, accumulate. London pullback, New York open, boom. Pullback before London, move, right? So if you want to swing one of these, that's a 500 pip swing. So this is why I identify the overall direction, because it allows me to get bigger moves. It allows me, my goal is always to be in line with the market maker. That's my goal. So even if I know a market in that, think about it. That's why I don't want to trade in induction, unless it's a nice, big, fat 4 hour, maybe sometimes an induction can be 300 pips. You can say, so it has to be relative, right? But generally, especially on a weekly cycle, that induction is going to be painful at times, and it'll be choppy. So it's nice to just wait till you speculate the market maker is out of there. Like I said, had my overall bias, accumulation, and then specifically this candle, once I saw that, it was pretty damn aggressive. Okay, let me check the chat. Okay, which days do you find more tricky between Mondays and Fridays? I would say Fridays, because Fridays will trap you into the weekend. Mondays I've gotten pretty good at, because how they play off of Friday, like Friday or like Sunday's low. But Fridays, a lot of times you'll have the structure, but the volume isn't there and the trap is just set. So I'm really careful with Fridays. But I do like to take reversals some Fridays, because just in my experience, they hold that move up till Friday a lot of times, especially like on a JPY, CAD sometime. Okay, so hi, said, so you use traps to determine direction and keep trading using EMAs, or do you need a trap each day? You don't need a trap each day, but I do want to wait for a daily structure, accumulation. So if I'm trying to sell, I'm trying to buy, accumulation, break to low, even if it's micro. So technically I am looking for a trap, but it can be a micro trap, right? It doesn't need to be this big 4-hour trap every time after, because remember, it's a multifractal. So after that 4-hour trap, that candle is set, I can look for, you know, just like this, I'll show you. Accumulation, sorry, accumulation, break low, W, right? Shift. See, that shift happened. That tell me that they had enough volume. So what do? I wait for that shift. Look, guys, it's always waiting for the shift. 4-hour daily right here. This shift happened, then I get a pullback, right? This is where I can get in. Probably need 20 pips to get, well, 40 pips, but maybe I just go 20 right here. I don't worry about getting hit, and I get 140, right? Let's do a couple more. Just you'll see it. Look, accumulation, break low, right at New York Open. I can wait for this engulf, get in on these pullbacks, and guys, the ECR will be there. The ECR will be there. You see? It's the price action. It's what's going on. The ECR is nice because it helps me make sure I'm going with the momentum the right way, and I'm waiting for my engulf like I like. That's why I like ECR, because sometimes what I will do is say I see this, okay, and this one, this will catch me up sometime. I'll say, oh, engulf, but it wasn't really an engulf, right? So this is why I like to use my EMAs and clearly see the momentum, because I'm not perfect. And when I'm looking for something, I might see what I want to see. Look, accumulation, break low during London, boom. Accumulation, break low before New York, go. Okay. Accumulation, break low, start of New York, go. Accumulation, break little mini W right at London Open, go. See, this is why session timing is important. This is why if you can build session timing into your routine, it's gonna help you. It's gonna help you catch moves and not run around like a chicken with your head cut off, okay? Accumulation, break low at New York, go. See, you can't, it happens so much, guys. And this is why I'm big on session timing. This is why I don't personally enter US pair, like Euro USD, UCAD during Asian, even if I do trade it, right? And sometimes it pay out, but see, accumulation. So like, say you saw this, right? And you said, oh snap, they broke away, right? I want to get in. You wait. Oh, London Open to do this. You see this during London. Now you just go look for an ECR on a pullback, put your stop loss below. So maybe ideally, this would be the perfect candle to get in right here, because it comes closest to the EMAs, it's bearish, and price go right up after it. Stop loss, 25 pips give you plenty of room, 20 pips, but even 5 pips and you're not hit, okay? So, yeah. What's an ECR? ECR is an EMA cross and retest. It's when our EMAs cross, we look for a retest in them. It's a strategy that Brandon developed. So hit up Brandon, get in tune with this PDF, learn the system. But it's a retest method for entry that allows you to trade with the current momentum, okay? But there's a lot more benefits to it. You can learn those. See, a chicken with his head cut off, so specific. Yep. How do you determine a good shift from a weak, from a peak zone? How do you use higher time? Okay, first question. How do you determine a good shift from a weak zone? So the best way is to just kind of find, for me is like kind of find where the, let me, hang on. Give me 1 second. I'm gonna find a good example for us to use. Okay, here go a good one. CAD JPY is a real good one. So this was the official shift out, right? And what we had, and we're not gonna do currency correlation today. We're just not gonna have time. Okay. So, I mean, we literally had this big range here. We'll go up. We'll just say this was our range, right? Price was just working this area. So when price is working this area, right, you're gonna say, how do I know it's gonna reverse? You could say, okay, this was the peak and boom, shift it out. Let's see. We think we shifted out, we come back. Think we shifted out, we come back. And obviously these are profit-making opportunities. Then we get more buyer induction. You think we shifted out. Say you, let's just say you sold here and you just left your stop loss right here, you know, or you sold here, left your stop loss here. They came back, took you out. Now, when this move happened, right, this specific bearish momentum, buyers that were buying off of here, they out of there. They out of there. Those sellers that were trapped up here, that were up here, they got hit. How do I know? It wasn't aggressive. It wasn't, you know, it didn't pull back. I can't confirm necessarily the peak up there, but all right, now I got to delete, give us room. But price shifted out. That means this area got hit, right? So that's what I would say is a good shift out. Instead of this one, when this low didn't get broken yet, right? Still playing off of it. So they gutted that low. You get in here, it's safe. And ride it. Well, we had a gap, but that was 700 pips, right? Crazy pips. And one thing you do want to be careful of, everything's a double-edged sword, because in the same breath, you could think this is a breakout and we're going to continue down. It could be used to induce sellers and pull right back, right? So we need to be very, you know, observant, use everything we have at our disposal, okay? And then you said, do you use higher time frame or smaller time frame? Higher time frame for sure. Oh, we're on a 4-hour. When I was a kid, I used to eat chicken soup from the chickens we had. So I felt that. Man, I only had chicken soup out of a damn can. So you live in a life, Josue. How many pages of this PDF? How many pages of this PDF book, bro? And some practical examples are set up. Yeah, the book is about 20 pages, and there's several examples, actually. There's a lot of examples in there. So yeah, it's definitely a good amount of those. Alrighty, I think I'm gonna call this session, guys. Do we have any last questions? Any comments, anything? Thank you, thank you. Great, great, great. Alrighty, thanks, Johan. Thanks everyone. Alrighty, and remember, the code is Forexia ! 30% off. All right, let me quit plugging. Peace out, guys. Have a good one. See you. Oh yeah, see y'all tomorrow for Win GPG.